This channel is for educational purposes only. You and you alone are responsible for your investment decisions. If you're following along for my $1 million challenge, you know I got a little bit more to invest this week. I found this article, Super Bowl sets record, 123 million viewers. Go! I'm going to quickly show you how I'm going to play this because I've already made the trade. I'm going to look for the top U.S. online gambling companies. With laws changing and regulation on gambling changing, not as many people are shooting to the casino anymore. They're doing a lot of this online. And so it's a growing industry. I feel confident it's going to continue to grow as the acceptance grows. So let's see. Here's some choices. That first company does not look like it's publicly traded. MGM, a big casino stock. I don't necessarily want that. They have a lot of overhead. DraftKings, there we go. $12.7 billion market cap. So it's not a fly by night, right? It's not a small cap. It's a larger company. I shouldn't say it's not a small cap. It's not a penny stock. Yep, and $44 a share right now. Ew, look at this. Earnings today after the bell. That can drive a stock up or down violently, actually. And that's why single stock exposure has more risk. There's more reward, but there's more risk. But in earning beat. Now that miss, I bet you it went down that day. Back in December 2022. Yeah, so this is kind of what I do when I'm starting my initial research of a company before I buy it. I tend to find a lot of good research on Yahoo. It's free. For instance, the 52-week range, $17 to $44 a share, so it's at the top end of that range. But to me, that would be the risk. It could go down to $17, $18. It could go up to $50 after earnings. It's hard to say. I'm expecting probably a 10% move. Let's look at the year to date. That is not working. How about, let's go back to the year. There it is. Wow. Massive run. So sometimes they hit the number, but because it was not soft, it was not way above, sometimes it will decline. So this could go either way, in my opinion. Knowing the Super Bowl killed it, I'm assuming it's going to go up. Let's see. Analysts, what are they looking at? There's quite a few people that cover it, so I look for that. I don't really necessarily want the real small stuff. I just tend to stay away from it. I've been burned too many times, but although that's where probably the real money could be made. Current estimates, so negative earnings. I just don't like that, but they're headed in the right direction. Yeah, and it's kind of like caffeine. Right? Once you're addicted, gambling falls in that category. It just doesn't really go away. And so I definitely see growth. Earnings beats. The analysts are kind of neutral on it. I took a quick look at the website. Okay, one share. Now, why am I only buying one share? I'm playing with really small numbers right now for this challenge, right? Because I just started it. I'm doing a limit order, meaning I only want to pay X amount. If it hits it, go ahead and place it. Do it. So I can tell you that I'm a proud owner of one share of DraftKings. Now, is it going to make me a gazillionaire? Absolutely not. There's a bigger picture here I'm trying to convey, that news can dramatically move a stock one direction or the other, especially during earnings season or when an event comes out. Sometimes it's a tragic event like the Boeing side door blowing off the plane. That can cause a stock to go down. Now, I was fortunate enough to hold one of the first iPhones when it came out, iPhone 1. And it was so mind-blowing, the technology compared to the flip phone of that yesteryear. And now most of this generation's probably going to not remember flip phones, but I did. And the iPhone blew it apart. Think that type of evolution in technology. And if you're able to invest in these companies, if they're run well, they can make you so much money. It's ridiculous. And with that, let's see how these earnings come out.